Good afternoon, everyone. I hope you've had a fantastic week. My schedule was super booked up with one-on-one mentoring this week, but I'm finally getting around to record this trade recap. On the pound yen, it was a trade I was in for right around 4 months, 15 or 16 weeks, I'm not sure exactly. They all kind of just blur together when you're in a trade for that long, but it went for over 1,000 pips, a little over 1,000 pips. I think I cashed out at 1,030 pips or 31 pips or something like that. So that's definitely the biggest grab of the single entry grab of my trading career. I've had a few positions on the pound yen actually that went for 1,000 pips, but it was a few different entries along the way that each went for a few hundred pips apiece. So, but you know, just a single entry, single exit. This is the largest trade of my career, and I want to get into the analysis behind this. So, if we are on the daily chart here, and you can see the overall market structure. We had a huge impulsive move down throughout 2016, and 2017 essentially started kind of just a reversal or just a pullback, you know, after this huge impulsive move. And we just established this channel. You can see we were ranging for a little bit, and we broke out to the top up towards 152 area, and then retested that range, and then we kind of just trickled around here. But as we were doing that, we initiated this channel here, or established this channel structure. But within that channel structure there was a squeeze, and in the process, what happens is you will eventually reach the apex of this squeeze, and price will break out of it. It has to. It can't stay contained forever. If you're consistently, maintaining price within, two boundaries, eventually it will break out. Well, it broke out to the downside, and when it did, I had a strong level of interest, or a zone of interest, that I was paying attention to. And if you know how to map the market correctly, that was essentially my line in the sand on whether or not I wanted to swing long or swing short. And once we broke that zone, my shift turned to looking for short opportunities. And that zone was essentially this zone here. And my entry was at this zone up here. Or just after price tested that. I missed the first initial zone. If you're just fibbing, high to low, that lines up. Let me actually bring in my other fibs here that I use. That zone was sandwiched between the 61.8 and the 78.6 fib retracements, which I failed to mention previously. Off that impulsive move, that 50% retracement, that's what triggered this impulsive move, and coming up into this previous structure. Now this, I believe, was the Brexit candle. This huge, this is a daily chart. That's a ridiculous candle. From high to low, that's almost 2,700 pips. So that's a huge move. That was stimulated by Brexit. Huge fundamental thing for the pound. But anyways, coming off that 50%, we had that huge move, going from 156 all the way down to 145 essentially. So 1,100 pips. Retraced back up 700 or 800 pips back up to the 154 area, and this was the area that I was looking at. If you remember, I pulled that fib, and you can see some nice, which it disappeared again. Let me save that as my default. So that was sandwiched between the 78.6 and the 61.8. Now I was looking for a test of that 78.6 to enter short. There was some nice confluence in addition to that, you know, up and around here. On the lower time frames, the 4-hour chart, there were some other little completion points and, you know, little channel toppers, you know, forming based off of this structure here, you know, somewhere in and around there. I was just looking for a little bit higher move up, and I'm pretty sure I had a limit order at 154. I can't remember exactly, but the high of this candle was looks like 153.85 essentially. So it just missed my limit order at 154 before we kind of got that move off. And when we did get that move off there, it was almost kind of like a confirmation that, you know, this may be our new lower high. And if this thing is going to turn into a downtrend, which it eventually did, you know, this area between, you know, this high and where price was trading at the time was a very nice, attractive place for a lower high. So that lower high came in at that, but of course you wouldn't have known that was going to be a lower high until, you know, 145 was taken out. But anyways, you know, in anticipation that the trend was shifting, you know, I was looking for that new lower high in that market structure. And so my trade actually came in, I believe I want to enter it on the 4-hour chart. Now this was, I took a couple trades in and around here. Once we established this range here and broke out, so let me just delete this big zone here and these fibs. So we had formed this zone. We broke out, retested it. I entered short in and around here on a trade, but I'm pretty sure I took profit as price was testing this thing, this little channel here. And then we traded back up. So if we bring in our fib from this move here, you can see once I started seeing price traded back up and really started to see price hesitation, we had some nice, you know, candle. I don't pay too much attention to candle formations, but you know, this candle essentially means that price traded as high as 152, you know, 60, and but was sold off heavily and essentially closed at the low. And then, you know, we just kind of started to consolidate again, much like we did here after breaking out, just like this. And this trade that I took was kind of based off of this historical, I'm just going to bring it all the way over here because price is snapping to my wicks or something. So once price kind of established this same market structure here, I was looking for something similar, just like this, to happen. You know, we get kind of this box range, we get a huge bullish candle, but it was immediately sold off. We get this huge bullish candle and immediately sold off. So this was my entry in here, and that entry was at 150. Let me just go in here. 155, 152.45.3, I believe, is my entry. So that was my entry for this short. And my stop, you know, I was anticipating this to potentially be a swing trade. So my stop, I put my stop up above, just above the high there, because it was at 154, I want to say. So it was a pretty decent sized stop, but I had prepared myself to be in this trade for a while, because if the market was shifting trend, I wanted to ride that trend. So this was my risk on this trade. I'll just extend it all the way over here and change that color. Do it like that. And this ended up being my reward. I actually got, so when I got taken out of this, I originally had my take profit at 140, which got nailed on the button eventually. But once I saw the bearish presence coming out just ahead of 140, I tightened up my stop quite a bit. Sorry, that's not quite exact, but you get the picture. So I was actually, that's really bright. I'm just going to leave it maybe a darker. Oh, that's even worse. I'm just going to kind of leave it gray. It's not as bad. Let me just adjust this. So my trail stop was at let me see. It was 142. 142.14 I think is where I got taken out. Just on that little scammy wick right there. But you can see just how awesome this trade was. But it took a long time, right? 4 months. Price isn't just going to unidirectionally move unless you get some kind of fundamental reason for that move, like a Brexit or something. So it took 4 months to move, you know, down to my target, essentially, which was eventually hit at 140. But again, let me go back into the trade management now. How did I manage this trade? I mean, because we had some wild swings in here, you know, from our initial low after we made a new low. That was, you know, almost a 600 pip. That was a 600 pip retracement. And how did I, you know, sit through that? I mean, most people can't sit through that. They can't let 600 pips go back. But, you know, I was at risk-free at that time because price had, you know, essentially came all the way close to my, within a couple hundred pips of my target, which was between 141 and 140 essentially. I wanted to get out before the lows because, let me jump back to the daily chart. I did all my management on the daily chart. You know, I really kind of wanted to get out before price came all the way down that, because that's just pushing it. And I had some profit targets down in and around between 138 and 140 based off of some you know, higher time frame analysis and fib structure. But you know, I was comfortable just taking it off where I did, or where I had planned. But you know, the reason why I had okay, so let me trail my stop. So once we broke back down, I had left my stop essentially where it was, because this was about 100. This was let's see, just right around 150 pip stop loss. But I knew that the market had the potential for running, which it did eventually. But you know, and you manipulate your stop losses based off of, you know, or your stop loss, your position sizing based off of your pip count or your stop loss pip count and all that. But you know, that's just simple trade management. We're running out of time here, so stop wise, you know, once we broke into a new low, I moved to break even and I just left it. I mean, I was willing to, you know, just let that wiggle. And once we just kind of kept making new lows, I just trailed it. Where I trailed my stop that took me out was based off of, you know, this resistance zone here. We closed the week pretty strongly and put in a nice little resistance level. I just put it above that. We got a spike up, and then price was rejected and went right back down and would have hit that 140 target. But over 1,000 pips, you can't complain about that. I hope this helped. Take care.